And welcome to the Donchian Channel breakout or trend following system. This is one of my personal favorite systems, and this system has also, or the Donchian Channel at least, it has been used by the famous turtle traders. You probably have heard about them. They are a very, very famous group of professional traders, and the Donchian Channel is or was at the base of their trading system. We will see why the Donchian Channel is such a great indicator. The basics are that the Donchian Channel is mainly a breakout and a trend following indicator. The channel describes and it shows you a channel, well, as the name suggests, of a 20 period high and a 20 period low on your charts. A high momentum breakout through the Donchian Channel can therefore often lead to new trends when the market is either changing into a new direction or breaking out into a new direction and breaking a 20 period high or low. Reversals can also happen when the breakouts fail, but we will we will only look at momentum breakouts that lead to trend following trades. Our system uses a 2049 period MACD and a 150 period SMA on our charts. We are always going to use, or usually we are using moving average as a trend direction filter. So we are only trading longs when the price is above the MA, and we are only trading shorts when the price is below the MA. And the MACD acts as a further trend direction filter. So this is how it looks like. The channel on your charts, and on those charts is the Donchian Channel. The width is always looking at the last 20 candles. It looks at the high and it looks at the low of the 20 candles, and then it plots the channel on your charts. And what we are going to do is we want to look for the crossovers of the price through the moving average, which is the big red line. And we also want to see, okay, the MACD is agreeing here. We are above the zero line on the MACD histogram. We are above the MA, and you can see here that the market is pushing in the outside perimeter of the Donchian Channel. Stop loss, you have a few options here how to place a stop. You can trail it along the other side of the Donchian Channel. You can trail it also along, you can add a 20 period moving average. I've done that in a few chart examples, as you will see later. That also works well. Both are options that are very, very valid. The 20 SMA or EMA, if you use it, it will give you a narrower stop loss and be closer to the price. I just wanted to start, well, let's start here. This is a textbook example, and then we'll take a look at this. So we are coming from here. This uptrend attempt was not a very strong uptrend. However, we were trading above the long-term period moving average. Then here we broke below the moving average, and also the MACD was also giving us the confirmation of a short market. I can zoom in a little bit, and you will see that here, this is where the market broke through the channel. Let me move this a bit. So here the market broke through the 20 period moving average, and then it pushed outside or through the Donchian Channel. You can see here was the previous low of the Donchian Channel, and the first candle already pushed into the Donchian Channel, but at this point we were closing right at the moving average, so I would recommend waiting a little bit longer. Here was then the actual breakout where we really separated ourselves from the moving average, and we kept pushing into the Donchian Channel. So that is where you would enter a short signal. And then you can see we trade outside along the outer Donchian Channel. We pull a little bit inside. Eventually we keep on going. So you probably will have, in this case, a better chance with a trailing stop loss at the outer Donchian Channel. Of course, it will be a little bit wider, but in case or when you hit a long-term trend, then this will make sure that you keep or stay in the trade, even though you have some retracements. Another option would be that in this case you put your stop loss above the moving average, and then you just go for a 4-to-1 reward to risk ratio, which also works quite well. 4-to-1 is a really good one, and it's large enough that it will provide long-term positive expectancy. Let me zoom back in and let me move this. So this is a classic Donchian Channel breakout system. This was a classic pattern as well. You can see we broke through the Donchian Channel we broke through the SMA, and then the trade immediately fall. That will happen, and for me it's always important that I include those types of markets, those types of trades, because well, there's no point in learning a system if I show you only the great trades, and then once you get into live trading yourself, then you see that okay, the reality actually looks different. So again, a 100% win rate does not exist. Here, a very, very good one as well. We came from an uptrend, we broke, and here again, we almost broke through the long-term period moving average, but I really recommend that you wait for a clear break. If you are closing right on the moving average, that's not good enough. Moving averages, especially the long-term ones, they often act as support and resistance, so stay away from those. So here we have a clear breakout. Stop loss could get above the SMA, and then you go for a 4-to-1 reward to risk ratio, which probably put you somewhere right at here, so we'll be able to capture this probably. The MACD was obviously agreeing here with a strong shift. We are breaking into, here was the previous low of the Donchian channel, you can see that, and then this candle actually broke out through. You always want to look for where was the previous Donchian channel, and then you want to look for a breakout here. And in this case, yeah, you can see we kept on trending lower, had a consolidation, then eventually we made our way again, continued. A very, very good one as well. Here this looks more like a re-entry. Those things can be very, very interesting to trade. Those are, I call them failed reversals. So we were trading above the moving average, then we tried to dip lower. This was a failed breakout. Again, we are closing right at the moving average. That's not where you want to trade. It's also here where it was not actually below the moving, below the 0 MACD line. So here we were still a little bit above the MACD histogram. However, this one is not good enough. We are closing right at the moving average. And if you see that such a breakout fails, and then immediately you get a reversal signal or a continuation signal into the opposite side, those are very, very important and very powerful setups actually. So you want to look for a failed breakout attempt, and then if you get a new signal on the Donchian channel quickly, then you can jump on those. The problem with the Donchian channel and with all trend following systems is that you will run into issues when the market is not trending, obviously, because, well, the systems have been designed to be trend following systems. So here in this example, you can see how the market keeps zigzagging around the SMA. And this is not typically what you want to see. You want to see a period here where you're not at the moving average for a while, then you cross it and you move away from it, you come back to it, you cross it and you move away from it. Same like here, you came back to it, then you move away from it, then you come probably back to it and cross it. Those are the nice areas, but you can see the market immediately comes always back and doesn't really is able to pull away from the moving average. So there will be a few false signals, obviously. If you see that the market is not really giving you a good time, and if you see that, okay, the market has, or a specific Forex pair has failed 2 or 3 times, move on and wait until the market has separated itself from the moving average once again, once you have a good trending market, and then come back to it. Of course, there are a few setups which you would not jump on anyway. So here, for example, this one is not really a good one because, well, you're not having a trend previously. So what you want is, if you want to trade short, you need to see a long breakout, because you want to see that the market is coming from above the moving average and then it's crossing below. This is not happening here. This is not a very beautiful cross either. Here we are, yeah, this one is debatable. This doesn't look too bad, so this would probably get you on a false breakout. But you have to understand that here as well, we are breaking away very, very long from the moving average, and then it becomes very nasty. So whenever you see this zigzagging around the moving average, then it's your clue to stay away from it. The good setups will usually be very, very obvious. Same here. That is not what you want to trade. You're always very, very close around the moving average. You're not really able to separate the price action from the moving average. There are a few setups which might be able to trade here. Definitely when you see something like this, where the price action is hovering around the moving average, and it's called hugging the moving average, this is a signal where you should not jump on the market. Here is then where you might be able to trade. Here we had a little bit of an uptrend, then we are reversing to the downside. We're breaking the SMA here. First signal, second signal here. If you want to get into a later signal, you wait for this consolidation to end. you wait for the next push into the Donchian channel, and then you can trade those lower. Here is, however, the best, or that's how the good signals actually look like. You're coming from a downtrend, the price hasn't been probably to the moving average for a long time. Then you see, okay, now we are breaking above the SMA, we are breaking into here was the previous high of the Donchian channel. We are breaking clearly through it. The complete Donchian channel is shifted during this breakout. Of course, this immediately fails, but it will not always happen. And if you have a valid system or a valid entry, you take it. Then you can wait for a re-entry. You can see that the market makes another momentum shift into the Donchian channel. You can see the previous high was here. Then this candle breaks it, closes right at the outer Donchian channel, and then we continue higher. Here was a setup which is very important to understand that what is wrong with this one. It looks good at first glance, but what I personally recommend not to trade is if you see that the market has already given you such a strong trend, 1, 2, 3 very long candles, then I would probably, and I usually avoid those markets. What you want to see is that the market is relatively new to a trend, and it hasn't had such a long trending sequence, because, well, the longer a trend goes, the higher the likelihood for a reversal becomes at one point, or at least a consolidation. The price will never move in one straight line. As we probably know already, they are always up and downs, back and forth. So after such a strong trending period, the chances for a pullback or a consolidation are very high. So what you don't want is that you enter a trade and then you immediately faced with something like this. So if you see a strong trending market, stay away from those. Here we are much earlier into a new trend. You can see that no strong trending period here previously. We have the MACD crossover into 0. We have the crossover here of the price into the Donchian channel, and then you can see the price glides along the outer Donchian channel and keeps trending here lower.